Welcome to your weekly market update. As you can see, interest rates have stayed consistent over the last week. We're waiting for this little red, these are called Japanese candlesticks, to break above here. As you can see, there's a ton of room to run up to this line. So what are some things that could cause that? Why are rates coming down? There's really two factors: inflation reports and weakening in the job market. And unfortunately, we have to root for the second to be able to see interest rates come down. So if you can see these comments from Fed Governor Waller, who's one of the voting members, and his comments hold a lot of weight with what the other Fed members decide. He had some good comments. He said inflation is not accelerating. The April CPI number was a relief. That's what kind of caused this rally back here. So that's the first thing he said. Second thing is policy is at appropriate levels. There's no reason that things should be putting more pressure on inflation, and he doesn't think further hikes are needed. So that was welcome news to the market. But this is the key comment. In the absence of significant weakening in the labor market, we need to see several more months of good inflation data before I would be comfortable supporting an easing in the stance of monetary policy. So if you've been following these reports, we said a couple weeks ago that with auto insurance skyrocketing like it is, rent continuing to be stubborn, there is an unlikely chance that inflation levels are going to come much lower. It has to come from the labor markets. So where would that come from? He went on to further say, hey, state and government jobs are declining quite a bit. So the budget of hiring at both the state and national government level, in March, it was 72,000, and April came all the way down to 8,000, right? So the average over the last year, has been 55,000. So if we look forward to their fiscal budget for next year, you can see that job creation has been reduced to 1%. So that means that's 18,000 a month in jobs compared to 55,000. So that should help these job numbers coming down. Also, we're seeing rents, at least in the what are called attached units, that's condos, that's townhome, something that shares a wall or ceiling with another unit. You're seeing those rents come down by 0.6% in March. Now, the single family homes are still up and continuing to rise. That means people are less likely to want to live in townhomes or condos. I think that's also because so many of those units have been developed. So we're seeing good development there. We're not seeing good development on the single family level. So that's why you're seeing these rents come down. It's a good sign for lower rates ahead. So is the 5% by June or July going to happen that I predicted at the beginning of the year? I don't think it will. I think that was more towards the end of this year now, beginning of next. We're going to have to hope that we stay in these mid 6% interest rates. These are the factors that are going to help them come down. Here's what I know. However, when rates come down, there are so many buyers on the sidelines paying those astronomical rents that when their payment becomes more affordable, those buyers will come to the market, driving up the price. So the price you get the home for is permanent. The interest rate is temporary. Yes, you're dating that rate longer than even I would have anticipated. And I did say 7% rates in 2023 at the beginning of 2023, and that happened. So we've been fairly accurate on these predictions. We follow an analyst and a mentor really to me of why this happens and watching these markets. So I hope you find value in these. Continue to stay strong on your home search. Remember about our Cash Plus program. That's the same as cash pre-approval. And remember about the other tools that we gave you on your pre-approval. And please let us know when you're making an offer.